All right, let's dive right in. Today we are talking about one of the wildest stories in the market recently, the Adani Group's stock roller coaster. We're talking about a journey from a total crisis to an absolutely stunning comeback. But it's not as simple as it sounds.
And it all kicked off with this one number. 70%. Minus 70%, actually. In early 2023, the Hindenburg research report dropped, and it sent absolute shockwaves through the market. The group's flagship Adani Enterprises just cratered. Its value plunged by 70%. That's not just a dip. That's a historic, breathtaking freefall. So that really brings us to the big question, right? How on earth did Adani stocks bounce back from that? And, maybe even more interesting, why didn't every company in the Adani Group recover at the same speed? Well, the answer to that really gets into this fascinating split personality within the group.
Okay, so to really get this, you have to understand that the comeback wasn't just one story. It was actually two very different recovery stories playing out at the same time. So let's break down that first shockwave and then look at the two different roads the companies took to get back on their feet.
Just take a look at this timeline. It really tells the tale. You've got Adani Ports, which is a real cash flow machine, and it bounced back to its pre-crisis level in just 119 days. That's fast. But then you look at Adani Green, it took a full 379 days. And the flagship, Adani Enterprises, took even longer. This just screams one thing. Not all Adani stocks are cut from the same cloth. Not even close.
And this is where we see those two core personalities I mentioned. Think of it this way. On one side, you've got what we can call the steady compounder, with Adani Ports as the prime example. Its business is super predictable. It's all about cargo volumes, so its recovery was quick and based on real, solid cash flows. But on the other side, you've got the high-risk bet. That's Adani Enterprises. It's basically an incubator for new, ambitious projects. And its recovery? Way more of a roller coaster, driven almost entirely by market mood and big investor confidence.
So these steady compounders have a name in the analysis, defensive utilities. And that's a perfect description. You can really think of them as the anchors of the whole group. We're talking about companies like Adani Ports and Adani Power. They have these super stable, predictable earnings, often from regulated businesses. They were the absolute bedrock that kept things from completely falling apart during that storm.
Okay, so that's the backstory on the recovery. Now, let's fast forward a bit. We're going to take a look under the hood with a snapshot from January 2026, all based on the source analysis. Let's see how those two different personalities are holding up.
And yep, you can see it right here. Those two personalities are still very much alive and kicking. You've got Adani Enterprises and Adani Green, both tagged as high risk. The verdict? Overvalued. Why? Because they're being pushed up by these huge, ambitious growth stories. But then you look at a steady compounder like Adani Power, it's seen as fairly valued, and its whole story is tied to solid, predictable earnings. Totally different ballgame.
All right, let's zoom out now and look at the big picture. We need to talk about the main drivers, the biggest risks for the whole group, and this is the interesting part, where the smart money, the big institutional investors, are putting their cash.
And when we talk about risk, there's one word that's absolutely crucial: leverage. Debt. Right? It was a huge part of the Hindenburg report. But here's the thing you have to understand. Not all debt is created equal. And within the Adani Group, the level of financial risk from company to company is, well, it's dramatically different.
And this chart just makes it crystal clear. We're looking at the net debt to EBITDA ratio. Basically, how much debt a company has compared to the cash it's generating. Look at Adani Green. It's fueling this massive expansion, so its ratio's way up there at around 5.5. Now compare that to our steady friend Adani Ports, sitting at a super conservative 1.5. This right here is one of the biggest reasons their risk profiles are worlds apart.
And you know what? The market is definitely paying attention. This quote from Kotak Securities really hits the nail on the head. It says, future gains have to be rooted in actual earnings delivery, not just speculation. Basically, the party's over for purely sentiment-driven rallies. Now, investors are saying, show me the money. Show me the real performance.
So where's that smart money actually going? If you look at who owns the stock, we're talking big investment firms, the picture's pretty clear. The highest conviction from both foreign and domestic institutions is in Adani Ports. No surprise there, it's the stable cash generator. But look at Adani Green. Even with its huge growth story, the conviction is way lower, especially from the big domestic players. That tells you a lot.
But there's another huge factor here, a powerful tailwind pushing the whole group forward. Government policy.
You've got India's massive infrastructure push, like the Maritime Vision 2047, which is a direct shot in the arm for Adani ports. And at the same time, the national goal of 500 gigawatts of renewable energy by 2030, that's the bedrock that Adani Green's entire project pipeline is built on.
Okay, so let's put it all together. We've got the fundamentals, the risk, the sentiment, the policy. So what's the verdict? Based on the analysis for January 2026, let's count down the top-ranked soaring candidates from inside the Adani Group.
All right, here we go. Coming in at number 3 is our old reliable, the steady compounder, Adani Ports. At number 2, we have Adani Energy Solutions, another one with a stable, regulated business model. And grabbing the top spot for the month, maybe a little bit of a surprise here, it's Adani Power.
So why Adani Power at number 1? Well, the analysis basically points to a perfect storm. You've got strong technicals pushing the stock up. You've got huge expansion plans in the works. Analysts are giving it overweight ratings, which is a big thumbs up. And on top of all that, it's riding the massive long-term wave of India's growing demand for power. It's got a lot going for it.
And all of this leaves us with one last really big question to chew on. As the Adani Group keeps moving forward, what's going to be its main fuel? Is it the solid, predictable fundamentals from its utility-like businesses, or is it going to be that high-octane but super volatile sentiment that's wrapped around its biggest growth bets? The answer to that, well, that's going to define the entire next chapter of this incredible